Excuse me.
Hey. Don't worry, I'll take care of this.
You never close your eyes anymore when I kiss your lips.
There's no tenderness like before in your fingertips.
You're trying hard not to show it, baby. But baby, believe me, I know that you've lost that love and feeling. Whoa, that love and feeling. You've lost that love and feeling. Now it's gone.
All right, by the time you see this, we will know if Fed Chair Powell has lost that love and feeling. Let's get right into it with this week's housing market update, and I got a surprise for you at the end on one of the loan products that I have been doing that is really making a difference and making home ownership affordable, especially in the Oahu market. All right, we'll get going with the big three. Prices are down across the island. Inventory is kind of sideways, and rates are up, but not a whole lot this week. Let's kind of break down the headline news. Home builders are still in the hurt locker. Existing home sales, they showed a rebound, not a big rebound, but a rebound nonetheless. And then VA rates are up, but we'll see what happens on Friday. They could be down by the time you're watching this. First up is the home builder sentiment. Home builder sentiment did not do well this month. It improved last month, but if you call going from 32 to 33, 2 months ago, I should say. But August, we were back down to a 32. Remember, anything below 50 is a negative feeling. That's not a good feeling for home builders. All right, down 1 point in August, in the 30s for 4 straight months. There's nothing that is going on that is building the sentiment for home builders. Elevated rates are obviously one big reason, but supply side challenges are not helping either. Those are the headwinds that the home builders are going into. Permits, case in point, permits fell 3% last month. And single family starts. So when you talk about home builders, you've got permits, and you got starts, and then you got completions. Starts on single family homes was the second lowest of the year, and that portends really to an overall limited supply of homes in the future. And if you look at the buyer traffic, 22, it was up from 20, but still super low. Future sales, 43, so no change there. And then current sales expectations, again, the rates are high, and they went down from 36 to 35. Home builders are not very happy right now, folks. Let's look at existing home sales for the month of July. We see that we got back above 4 million sales, or pace of sales, which is good. But I will tell you this, before COVID, we were around 5 million. 5 million was about the normal pace, but we're at 4 million now. So not great, but better than we were the previous month. We had a 2% boost from June to July. And what this is showing, really, if 5 million is normal pace of sales, 4 million is below, what that means is there's a lot of pent-up demand. All we need is some rates to come down. It's like lifting up the gate and letting the bulls run in Pamplona. So median price actually dropped a lot, down to 422,000 from 435,000. And then we got days on market. Days on market continues to increase from 27 to 28. It's not a lot, but still going up. And then 4.6 months of supply. That's pretty normal. All right, that shows a balanced market. That's not terrible. That's balanced. It's good for buyers. It's not bad for sellers. All cash buyers, 31%, up from 29%. First-time home buyers at 28%. And it's interesting. You got some mainstream media. You got Diane Ola from CNBC saying how bad this market is, that typically 40% of all home buyers are first-time home buyers, but her numbers are way off. And if you look at this chart here, you will see that the first-time home buyer, especially over the last 15 years, has been right around 30%, and that's kind of where we've been. The only time we were really in the 40% range was at kind of the height of the Great Recession. So, right before the market really tanked. But we've been around 30% for first-time home buyers really for the last 15 years. So don't believe everything you see in mainstream media. First-time home buyers, steady 30% for the last 15 years. All right, so let's take a look at VA rates, man. The VA rates, I tell you what, VA rates have lost that love and feeling. We are back near 6.25%. All the momentum that we had from basically 2 weeks ago, we've lost it. You can see that last August, we were already in the fives last August this time, and rates were still going down. I think there's still an opportunity for that. We just haven't seen it yet. And like I said last week, we would stay somewhere between the 6 and the 6.25. No real good news. Actually, we've had a couple Fed presidents come out in support of Fed Chair Powell saying, you know what, might not be the right time to cut interest rates. So that's something that we have to make it through. But I will tell you this, and the Fed has been talking about inflation kind of stalling, inflation going up, blaming it on tariffs, when really the biggest impact on inflation is rent or rent equivalents, which really has nothing to do with tariffs. But I will tell you what should be impacting their decision, and that is, inflation's in a range. As long as we stay in that range, we're good. But the labor market is slowing down. Case in point, initial jobless claims were up 11,000 last week to 235,000. That is the highest level in 2 months. And continuing claims up 30,000 last week to 1.972 million. Again, we're so close to that 2 million range. And basically, that is the highest level of continuous claims we've had since November of 2021. The labor market is slowing, but the Fed, they're choosing not to look at those numbers. They're looking at numbers that really have not been accurate. Really, the BLS numbers, which it caused the BLS president the head of the BLS to get fired a couple weeks ago. So VA rates in that range between 6.25, closer to 6.25. And what does this mean? Well, mortgage apps. Mortgage apps were flat last week for purchases. Refis actually dropped 3%. Inventory, we're still at a high inventory level, near the highest inventory levels we've had in 10 years. ARM rates, I will tell you this, my 5-1 ARM rates, and really everyone's 5-1, especially Govy loans, FHA and VA, are really much lower than 30-year fixed rate mortgages right now by a quarter to almost a half a point lower. And, for me, I'd much rather have a 5-year at a lower interest rate guarantee than maybe a 2-1 buy down where when you do the math, you're going to spend more money on your mortgage over the course of, the 2 years than you will certainly over the 3 years or 5 years even than you will on a 5-year ARM. So now is a great time to buy. It's kind of like buying stocks. Do you want to buy stocks when they're at their peak, or do you want to buy them when they're at their lowest? We are definitely in a trough, if you will, for housing sales. Home prices are steady going down. Not a lot, because in Hawaii anyway, not a lot. But now is the time to buy, because guess what? Interest rates will drop. All right, the cycle of life. Interest rates will drop. When interest rates drop, home prices go up. Well, guess what? If you've already bought that home when the home prices were low, well, it's like that rising tide that lifts all ships. When interest rates going down is a rising tide that will lift the value of your home. All right, how you like that for nautical? All right, hey sellers, stay patient. Don't give up. Don't give up. All right. There may be an opportunity to refinance. Once rates go down, you'll be able to sell, but do not give up. Don't give in to any defeated attitude. There are ways. If you're a VA buyer or you're a VA owner and you are in extremis, you got to contact your servicer, because your servicer is obligated now to help you get past these tough times. And the VA is obligated as well. Remember, President Trump just signed the VA Home Loan Reform Act. So anyway, that's all I have for you right now. You guys have a great week. And oh yeah, just so you know, this next video is going to be on this amazing loan product that I just closed with a happy family that grew from 2 to 3. All right, well, stay tuned for that. Talk to you later.